we always try to focus on what's knowable and what's important. Now, currency might be important, but we don't think it's knowable. Other things are unimportant, but knowable. But what really counts is what's knowable and important. And what's knowable and important about Coca-Cola is the fact that more and more people are going to consume soft drinks around the world and have been doing so year after year after year, and that Coca-Cola is going to gain share, and that the product is extraordinarily inexpensive relative to the pleasure it brings to people.
Do you think we have a dollar problem, or is the Japanese have a yen problem?
Well, I'm going to let Charlie answer that.
I have no comment.
That's a very good question. But the trouble is, anytime I say that's a very good question, it's probably because I don't know the answer. I don't know the answer to that. Foreign exchange baffles me, frankly. I mean, I think in terms of purchasing power parity, because that's a natural way to approach it. But purchasing power parity does not work very well as a guide to how exchange values will behave in any shorter, medium, or maybe even long term, because the world adapts in different ways. Sometimes it adapts by high rates of inflation to a sinking currency. Usually it does. It hasn't done that in respect to ours, but we're only sinking relative to a couple of other important currencies.
A lot of the companies that you invest in, like Coca-Cola and Gillette, seem to do better when the dollar is weak and interest rates are falling. That seems to be the opposite of what's happening now. So how is Berkshire positioning itself to take advantage of the current economic position with that assessment in mind?
Yeah, well, that's a good question. But if we thought we knew what the dollar was going to do or interest rates were going to do, we won't do it, but we would just engage in transactions involving those commodities in effect, or futures directly. In other words, it would not be, if we thought that the dollar was going to weaken dramatically, and we won't get those kind of thoughts, but if we did, we would buy other currencies, and it might benefit Coke in dollar terms if that happened, but it would be so much more efficient directly to pursue a currency play or an interest rate play than an indirect way through companies that have big international exposure. We would probably do it directly. We don't really think much about that, because just take currency. If you look at what the yen has traded at, over the last, since World War II, from, what was it, 360 down to, 70 some, Charlie, when at the low, and back up to 140 some, and now, I don't know, 105 or wherever it may be. I mean, those moves are huge, but in the end, we're really more interested in whether more people in Japan are going to drink Coca-Cola, and over time, we're better at predicting that than we are at predicting what the yen will do. And if Coca-Cola satisfies people's needs, liquid needs, for more and more people, we will probably get a reasonable percentage of their purchasing power of those people around the world for their right to drink Coca-Cola, or for shaving, or whatever it may be. So if the world's standard of living improves bit by bit over time in an irregular fashion, and we supply something the world wants, we will get our share in dollars eventually. And quarter to quarter or year to year, how that moves around because of currency moves really doesn't make any difference to us. It makes a difference to reported earnings in that quarter. But in terms of where Coca-Cola is going to be 10 or 20 years from now, it would be a big mistake, I think, to focus on currency moves as opposed to focusing on the product itself. And Japan offers a good example of that, because you had this, you really had a move from 360 or whatever it was to the high 70s or thereabouts. That is an incredible move in currency, and it can overshadow in the short run even what's happening in the business. But long range, what's really made Coca-Cola strong in Japan is the fact that the Japanese people have accepted their products in a big way, and Coca-Cola has built this tremendous, for example, vending machine presence. And the Japanese market is very different than all the rest of the markets in the world virtually, in that such a high percentage flows through vending machines. And my memory is that we may have something like 900 and some thousand out of something over 2 million vending machines in the country. So we got this tremendously dominant position. It's a little like billboards might be in this country. Plus we have this terrific product, Georgia Coffee, which is huge over there. And that's the sort of thing we focus on, because that's something we understand. We don't understand what currencies are going to do week to week or month to month or year to year. And we always try to focus on what's knowable and what's important. Now, currency might be important, but we don't think it's knowable. Other things are unimportant, but knowable. But what really counts is what's knowable and important. And what's knowable and important about Coca-Cola is the fact that more and more people are going to consume soft drinks around the world and have been doing so year after year after year, and that Coca-Cola is going to gain share, and that the product is extraordinarily inexpensive relative to the pleasure it brings to people. Coca-Cola in the 30s, when I was a kid, I bought 6 for a quarter and sold them for a nickel each. That was a 6.5 ounce bottle for a nickel at Coke. And you can buy a 12 ounce can now if you pick a supermarket sale for not much more than twice per ounce what it was selling for in the 30s. You won't find many products where that kind of a value proposition has developed over the years. So that's the kind of thing we focus on. And interest rates and foreign exchange rates, important as they may be in the short term, really are not going to determine whether we get rich over time. The best time to buy stocks actually was in recent years, has been when interest rates were sky high, and it looked like a very safe thing to do to put your money into Treasury bills at actually the prime rate got up to 21.5%, but you could put out money at huge rates in the early 80s, and as attractive as that appeared, it was exactly the wrong thing to be doing. It was better to be buying equities at that time, because when interest rates changed, their values changed even much more. Charlie?
Yeah, we have a willful agnosticism on all kinds of things, and that makes us concentrate on certain other things. This is a very good way to think, if you're as lazy as we are.